Hello and welcome to another video about KAVA. KAVA, a lot of people asked me the last few days about KAVA. I don't really understand why, because this is not a good chart at all. It's also just continuing to drop down. It's a coin that I covered, I think, 2 or 3 weeks ago in one of the member live streams. So in the member live stream, I did say at the time that it's not a good chart and that that there is no impulse at all. Well, there is an impulse possibly here to the downside. I think it was, I can't remember, I think it was early December. And yeah, we have been dropping basically like 30-40% since then. So I think the view within the member live stream was absolutely correct. This is a chart to avoid. I don't see any reason to be long here at all. Yeah, we can be short, certainly. But even there at the moment, this is just dropping. You're quite far away now from a resistance level. That's the problem when going short here at the moment. On the other hand, on the flip side here, this chart could still, become more bullish as a so-called diagonal pattern. I'm going to show you that. But seriously, at the moment, it's time for quality. It's time to be picky when you're choosing your charts and coins. I mean, why would anybody go long here when you have some other charts that are possibly more interesting, and you will find tons of charts that look similar to KAVA. So from a chart point of view, yeah, not good. My primary expectation would be that this is actually doing here something quite bearish, which would be we topped in a WXY pattern, which is this one, WXY. There is no impulse at all here to the upside, no impulse at all, I don't see it. And to the downside, the problem is always with charts where the downtrend looks more impulsive than the uptrend. That's never a good sign. So when labeling the move down, I mean, because we have a WXY to the upside, I would have to find a way to label this as an impulse down. And there's a few ways of doing this. My primary expectation would actually be that we say this here was the wave 1 to the downside. We moved up in a 2, which means that we are probably still in the wave 3, which makes sense looking at how this is all developing. We can also look at Fibonacci extension targets for that. So if I say we had here the wave 1, here the wave 2, then you would be expecting to reach in a wave 3 the area between the 1.618 extension and 200% extension. We're exactly there. We should then at some point see a wave 4 correction and a wave 5 down. But this is nothing I would be trading, especially because this still looks very, very strong to me, like a downtrend, which is completely active. Negative momentum is increasing. Absolutely a horrible chart. Again, be picky when you choose your charts, Let me just change here the wave degree. The problem is also there's a lot of coins out there at the moment that actually, where the downtrend is slowing down. I mean, here it looks like it's actually increasing in strength. And you can see that when you look at even on the 4-day MACD, you can see that there's an increase in negative momentum. That's certainly not good. And this could become something like that. So a wave 1 down, a wave 2 up, a wave 3 down, 4 up, 5 down. This could eventually become a coin that goes eventually to onto the crypto graveyard. I'm very honest with you, like many other cryptos as well. Now, this can always recover, but also here then the problem, we have now dropped below the 78.6% retracement. Or we are basically there. So to explain that, this could be a leading diagonal. So I could make an attempt to count this bullish. But again, if you have charts that don't have a leading diagonal, then you should choose these, because a leading diagonal, especially in the first wave to the upside, is always unreliable. Because they can easily be corrective patterns. So it could also be this 5 waves up. This would be the bullish count. Then we have a wave 1 here. But then, okay, then we could say, right, we are maybe in an ABC pattern to the downside. But then the only chance it really has for me to reverse now with a certain likelihood is after this 3-wave move down, ABC. But it needs to hold the 78.6% retrace at 52.8 cents. And it doesn't make any sign of stopping. So below the 78.6% retrace, the scenario of a leading diagonal, a wave 1 up, a wave 2 down, gets very unlikely. And that's exactly where we are. So, if this level holds and we suddenly see a bounce, by all means, if you have the feeling and the need to go long here, do it. But for me, there's nothing. There might be another short setup when you see here a wave 4 come up, and this will be a weak wave 4, then to short down the wave 5. I think this is sort of a possibility. But yeah, it's a chart for me to avoid. There are better quality charts, and especially in the bear market, it's time to be picky. This was the log chart. The only reason for the log chart is that when you have a chart that looks so messy in the beginning, yeah, we had a few of them like Luna, and AVAX doesn't look very good as well. On the way up, you see the subwaves better on the log chart, and also a chart that has basically retraced like 98%. You can calculate the targets better to the downside here on the log chart, because we're really getting into scenarios where a good chart shouldn't have dropped that much. Yeah, I mean, yes, I understand a lot of cryptos do that in the bear market, but even if I measure the FIBs here, we are so far below the 88.7% FIB level. Here on the linear chart also, that is not good. We dropped below that support level as well. And yeah, I mean, there's a 25-cent level might be the next support here. Yeah, unfortunately, that's it. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.